Okay, I wanted to do something for y'all this morning since you were talking about macro and group and show you what my thoughts are on that. I've got two or three different, whatever you want to call it, indicators, ways of viewing it. Actually, let me take this off because I want to show you when I pull them up. So I think the most important thing initially is just to talk about mentality. Everybody is, well, not everybody, but there's some people that are down because their investments are down too, so it brings them down mentally, physically. But we have to fight that, and one of the ways to fight it, from a positive standpoint, is you just get out and do something that you enjoy. I mean, time has to pass before this mid-cycle dip is over. We are going to continue. I'm not worried about that. The only question I have is, will summer be a lull month, or will we start going up in May, which is kind of like my base case right now, May 13th to May 21st, I think we'll be headed back up. And that would be the 2-month period, 60 days after the top. We have seen situations where, I was looking at that presidential chart yesterday, situations where it would extend, 3-4 months into the presidential election, and then it would break out. So there is a possibility that would happen. I'm not saying for sure that we'll go up in May. It's just, just a thought that I had based on some things I was seeing. And we have seen a pump in the summertime before. I mean, it's not that odd. We've seen it go up in July before. So who knows? We'll either see a move up in May, or it'll extend into July. The dip will, and then we'll see a move up, or at least a move sideways and up into the presidential election. And if something like that were to happen, then the October 2025 date, like I showed on the presidential chart yesterday, that would definitely be in play. I think we'd extend in that case. But, based on the username that I use online, Bike for Sale, obviously I'm big into cycling and staying active and, keeping in shape that way, because I do enjoy, I'm real passionate about just riding around and looking at nature while I'm getting exercise in. So find something like that really drives you, and get away from crypto for a bit, especially if all you're doing is holding your long-term bags. Sometimes we're not going to have short-term plays every day, although I've been posting a few lately. And the leverage trades have been doing fairly well. I'd say over the last 20 trades I've done, I'm probably 50 to 60% profitable, which really I think all you need to be is 30% profitable to keep increasing your trade bag. But I'm going to keep an eye on things daily, and we'll see if we can still find some plays. I know there haven't been many that have been going up. AMMX is one of them. It took a while to get going, though. So the way I look at it, just to take another, I guess, different viewpoint before talking about this, and I know I said I'd make this short, it's kind of getting long. There are people that run this whole show, whether you want to believe that or not, it's true. And I think a lot of people do believe that, the algorithm, whether it's BlackRock or whoever it is, the algorithm that they run is for their benefit. And if you think about what makes them different from you and me, aside from them being willing to do all these evil things without worrying about it, without it hurting their conscience, the thing that they have in spades is patience. And we talk about patience here a lot. So when you have a lot of money, you have a lot of opportunities, other opportunities show up. And you also, probably the main thing is you have a lot of patience, because you don't have any reason to worry about, paying your bills, that sort of thing, like most of us do. And in that regard, if you, no matter what your situation is, if you can have that patience, still have that patience, then they can't shake you out of this market. And we already saved a lot of money. We held some profits here at the top. So you're already ahead of like 90% of the traders, even if you've already bought back into your alts, because they were already down 50%. So just realize that you've got a huge advantage already. Once the market starts going back up, you'll make a lot more money than the people that just held through this dip. So I feel like the group is in a better position than most groups out there. Now let's talk about, so this is just the macro view on a daily chart. I think I'm on, yeah, daily. Clearly we need to hold this secondary support. We've already fell through this support here. So coming back up, if we do lose both of these, then we'll know that we're starting to get more bullish again once we get back above these, because we have to recover them. So there's pretty much a clear neckline here. We're going to get more volatile as this plays out, I believe. And our levels down here that it could wick to are about 50K and what is that, 42K or so. There's a lot more support down here at 42K. So the quicker it hits these levels, if it does come down here, not saying it is definitely going to come down here, we could just sweep 56 to 58K, and I'll get into that here in a second. If we were to wick down here quickly, then our recovery would be quicker. With the longer this takes to play out and go sideways and just slowly go down, I believe the longer it will take for us to get moving up. So there's only two ways it can happen. Either you're going to have a shallow dip to 56 to 58K and then it goes sideways a little bit longer, or you go ahead and pull the Band-Aid and get it over with and just wick down and then start working your way back up. And it will affect the alts for sure. I mean, some alts will go down much more, but ones like AMMX that had already corrected some and had just gone sideways and done nothing, you saw that they moved up. So there are tokens, and there's even 90% down tokens, the ones that are down that much that will recover. I know it's hard to believe that, but they will. I've seen it before. So let's see. What do I want to talk about next? Okay, so let's talk about if we were to put a fixed range profile on. Let's see, do I want to do it from here? Yeah, maybe I'll just drag it from here. Okay, so here's some of our most important levels. That's why this support right here that was lost was so important, because there was a lot of volume in this area. There was a lot of volume at this bullish line here that was lost. It actually rejected right there where most of that volume is. And then our point of control, where most of the volume for this whole move resided, is, we'll just call it right around 50K. We don't have to be exact with it. And then the low range would be way down here at 42K. And my lines aren't perfect. I didn't really draw it based on this, but they're close. So what these represent is, up here is premium for this range anyway. So up here is the premium. Let me check one thing. What if we were to drag this to here? Oh yeah, well that makes sense. It goes even further. Well, your point of control stays the same, but there's still a lot of volume that happened right at the support line. So what you're looking at here is, this is kind of like the median price, what everybody agrees is the average price that people are willing to pay. This is the premium, people are overpaying up here basically. And then somewhere down here is a huge discount, is the way you could look at it. And I'm actually curious about one thing. Let me see something. So all the way to the bottom before the breakout. Point of control is way down at 22K. I don't think that'll happen, but anyway, I was just curious to see that. Yeah. Okay, so that makes sense. So we've got 2 point of controls. It just depends on where you pull it from. So I didn't actually put this line here for this point of control, but it ended up being perfect. It's right around 42.7K, and that's where a lot of the volume happens. So if we were to get a wick down, this would be about a 40% dip from the top. This is about 30%, and 56 to 58K, I think is about a 20% dip. So I don't see us going any lower than any of those. So this would be the very bottom if it did happen, and I'm not saying that it will. What's the other thing I wanted to look at? So we got that. Oh, I wanted to look at fibs. So if I pulled a fib just from this move, if I truly believe that this is the very bottom that it could be, then this 58K area, I kind of like this area too. So if I was just calling this, what are my buy areas for this whole move, I would say right in here makes the most sense to me. But again, we could just sweep this and fake everybody out and head up. But overall, this makes the most sense because that's well, I know this is a huge box, but it could even come down to the 786. So honestly, it's between 45 and 53K. I mean, this makes the most sense to me as far as where it would fall down into. And then if that was to happen, let's just see what the pattern looks like. Yeah, that doesn't look too strange. I could see it happening, but that's a pretty big dip too. I don't know that it'll get that far. I'm just trying to envision. Yeah, I mean, it kind of makes sense. I think for me, it'd probably look more like that if it was to happen. But they're also not going to put it at exact. They're usually going to dip under it. Dip under the golden pocket. Yeah, I mean, I like that whole range. It could hit somewhere in there. And I would encourage you to think, come up with your own original ideas. I was talking to Nansen during the Nansen War Room. I don't like Twitter for that. There's so many echo chamber ideas, people just parroting other people's ideas. Really work to come up with your own ideas if you can. I mean, it's good to take the temperature of the sentiment, but in general, in life, not even dealing with crypto, there's very few people that are actually out there, giving their original ideas. So, spend some time alone with yourself and, just come up with your own ideas on things. You'll be a lot more confident. You'll be a lot more in control of your emotions, I believe. Yeah, so that's what I'm looking at on that. And anything else? Yeah, I mean, a lot of the tokens I was looking at yesterday, I didn't think they'd keep dipping, but they did. I mean, that's typical, though. If Bitcoin dips, the rest of them are going to as well, unless you've got a token that's already gone down a lot. It wouldn't dip. Let me just see one example here, and then we'll wrap this up. Let's see what TPU did on this dip. Yeah, TPU actually went up. So, I mean, I get it. There's some people that believe that there's no chance that things will recover, that they're just rugs, they're scams. But if that's the case, why is it going up? Why is it not just like falling off the table and like that heart rate monitor thing? I mean, I've seen rugs before and they don't look like this, but anyway, we'll see how it plays out. I'm still thinking that it could do like a inverted head and shoulders, kind of go sideways a bit, maybe even dips one more time, does one of these, pops out of it, just like this. And Sturdy did the same thing. Yeah, it didn't go down 90%, but it went down 80%. What's the difference? 10%? I don't see a whole lot of difference with that. But anyway, that's my ideas. I'm going to end it there. And y'all let me know if you have any questions on that.